What's an S Corp? This is probably one of the most frequent questions that I get. There is so much misinformation out there about S corporations. They happen to be the type of entity that I specialize in. So let's talk about it. My name is Courtney. I'm a licensed CPA and daycare owner. And this video is going to be an S Corp primer. At the end of this video, you should have a basic idea of what an S Corp is. We're not going to cover all the details, but we'll go over the main things that you need to know. An S Corp is a type of business entity. The S in S Corp stands for small business, but don't let the name fool you. S Corps can be any size. I've personally worked with S Corps that had revenue in the tens of thousands, all the way up to S Corps that had billions of dollars in revenue. The one thing that all S Corps have in common is that they are all flow-through or pass-through entities. That means the S Corps themselves generally don't pay income tax. Rather, the tax flows through to the ultimate owner or shareholder, and at that level, at the 1040 level, is where the tax gets paid. Because an S Corp is a separate business entity, it has to file its own tax return every year. So if you are an S Corp owner called a shareholder, then you have at least 2 tax returns to file every year. You have your individual tax return to file, and then you have your S Corp tax return to file. There are 3 main things you need to know about S Corps, and we're going to run through them fairly quickly. Number 1 is S Corps are required to pay their shareholders a salary. The IRS doesn't dictate how much that salary must be, but they do say that it must be a reasonable salary. So S Corps must pay their shareholders a salary every single year that they have a profit. The second thing to know about S Corps, and this relates to item number 1, is that S Corps don't pay self-employment taxes. So this differs from most other entity types. Right? If you have a partnership, they're going to pay self-employment taxes on 100% of the income of the partnership. But this isn't the case for S Corps. S Corps don't pay self-employment taxes because they are required to pay their shareholders a salary. So if you're the owner or shareholder of an S Corp, then you pay ordinary income taxes only on the S Corp's regular income that flows through to you on what's called a K1. Exactly what a K1 is and the different parts of it, that's really outside the scope of this conversation. But think of the K1 as being a W-2 for a business. So the S Corp has 2 types of income that it throws off. Ordinary income that flows through to the shareholder on the K1, and then because it's required to pay the shareholder a wage, it also issues the shareholder a W-2 for its wage income. So the shareholder of an S Corp only pays self-employment income on its W-2 wage income that it receives from the S Corp. A simple example, just to make sure I'm driving this home. If an S Corp has $100,000 of net income before it pays out its shareholder salaries, and it's supposed to pay out $20,000 in our example for shareholder salaries, then the ordinary income of the S Corp at the end of the year that gets reported on the K1 is $80,000. And then the amount of W-2 wages that it pays out is $20,000. The $20,000 reduces the S Corp's income, right? It takes it from $100,000 to $80,000. The total amount of taxable income to the shareholder doesn't change. The taxpayer or shareholder is still paying income tax on $100,000 of income. But on the $80,000, it's only paying ordinary income. And on the $20,000 of wage income, it's paying ordinary income plus self-employment tax. I hope that I hope that example was helpful. So thing number 3 to know about S Corps is everything in an S Corp must be pro rata. That means that income and distributions must be made proportional to ownership. So if you are the sole owner of an S Corp, then 100% of the income and loss accrues to you. And you can pretty much take any distributions that you want. However, if you have 2 or more S Corp shareholders, then the profit and loss and distributions must be made in proportion to the ownership. So if you're each 50-50 shareholders or owners, then earnings must be allocated 50-50. Similarly, distributions must be allocated 50-50. All right, so there's a lot more that we could cover about S Corps, but this video is really just meant to highlight the basics. I hope this was helpful. If you have any questions, feel free to drop them below.